Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, February 28th, 2011. Well, folks, the markets opened higher today, as you can see on my chart of the SPY, which again mirrors the S&P 500. Right here, you see an open pretty strong today on the back of a weaker oil price initially this morning, as we saw oil gapping slightly lower after being strongly higher late last night. All right, now some keys here. First of all, the instability in the Middle East and Northern Africa continues to be mostly focused in Libya. Overnight, the Chinese put a little pressure on Gaddafi to step down. Who knows if it's going to happen, but to see the Chinese pushing for that is a very good sign for the stability of the region. You have to see the China really stepping in here, taking a leading role in the overall governing and kind of stability of the whole entire world. And I think that's what we're seeing here a little bit, which is giving confidence to the markets. Now, having said that, the markets inched up for the first hour of trading, but could not get through the master level at 133.20. Now, you might say, well, where's that level coming from? Let me show you. All right, clearly, this level right here, you can see the gap down right there, pivot high from the 15th, and right across. You could never get above that level. Then you gapped above it, came down, retested it on this side. Notice how it's resistance here, then major support here, and then again, here we gap above it and come back up into this level right there, hammering on this point of interest. All right, and again, please note right here, you have resistance, then support, and then resistance up here. And again, notice the gap up today, gapping above the blue trend line, which took out this level. Now we're retesting this level to the downside. But either way, very interesting chart today that we are keeping a close eye on. Now you might say, well, okay, so overall, oil's really not having a big move to the upside. In fact, the USO right now is down 11 cents on the day. But what's kind of bringing this market in? And this is what I'm going to tell you right now. What you have right now is a setup of a perfect retrace in progress. Now, what's a retrace? Well, a retrace is you have a 2 or more day consecutive move, which again happened last week. Tuesday, Wednesday, we had two big down days. Thursday, we had kind of a pause-ish day. Friday, we had a big up day. So the two consecutive days essentially changed the short-term direction in this market. And we can show it on the daily chart right here off the 134.70-ish area pivot top right there. You have a big down day, pause day. Now, inside of that big 2-day down day, what you get is usually a bounce, which is called a retrace. A retrace means that the market will trade up inside that area of the fall from this pivot high down to this pivot high low. You see a move sideways to up, and essentially that's the beginnings of a bear flag pattern, also known as a retrace. Now you look for the 0.618 retrace Fibonacci levels. I mean, there's a bunch of different ways to try to figure out where the top is, but what we are seeing now is the market getting a little bit weaker, and the retrace is firm and intact. So again, based on what we're seeing here, as long as you don't take out this pivot high at 134.70, you can make a case that this is an inside bar retrace, which is setting up for a secondary move to the downside. Now, the one thing, again, that you have to always remember is the volume is unbelievably light again today. We saw good volume last week until Friday. Friday, it died down. Today, volume is pretty light again. We've done about 67.5 million, on pace for maybe 130 to 150 overall, which is, again, pretty much on the light side. I think if the market collapses, you'll see more volume come in, but for now anyways, you're not seeing a collapse. You're kind of just seeing a gentle float lower. Now, again, this level worked beautifully. The 133.20 level, notice how you hit it so many times. And this is something we were watching in the intraday stock chat, which was very, very fascinating. Notice how, again, you hit it on the second candle of this 10-minute chart of the SPY intraday. You pulled back, then you hit it again on the fourth candle, fifth, sixth, seventh, eighth, ninth, 10th, 11th. Each time you're hitting it, and it's not able to break out. So that has to be taken as a symbol. Let me just ask you something. If you run against a door and you're trying to break down a door, and you run against that door 5 times, 10 times, 20 times, 100 times, isn't there going to be a point where you're going to give up and say, listen, I can't break down this door, and you're going to decide to look for the path of least resistance, which might be going in the opposite direction and finding another route. And again, that looks to be what happened here. The market's hammered on this 133.20 level. In fact, they traded all the way up to 133.32, and then by the end of that 10-minute candle, it pulled back. Same thing here, and this was a big failure. So ultimately, the markets attempted to break out and failed. Therefore, path of least resistance is down. Markets sell off to the 20. Notice the perfect bear flag, guys. This was a classic bear flag. You have to love this. Down, sideways, perfectly sideways, slightly inclined along the 20. That's a down sharp, sideways to up move, bear flag, and look at the downward move it goes. So it goes right here. You hit the 50, you get a small bounce. Now you're hitting the 50 again. The question is, do we take out the 50, or does the light volume help keep this market propped up? And again, that's really what we're watching now, because you have the volume extremely light. You can see it over the last few candles declining even more so right here in this level. And again, ask yourself, is this 50 going to hold in the light volume? We're going to watch and see if it does. If it doesn't hold, you're going to go to this pink trend line, which is also gap fill. That's right around the 132.30 level, 132.35 level, right in this range. That would be your next major support. And then after that, the 200 on an intraday basis. But again, right now, it's appearing more and more like you have a retrace going on in the market. And again, I did put out a new shorting opportunity on something in the markets today to the Research Center subscribers. I gave it out in the hot charts and alerts as a pivot. Just as I took the trade, I gave it out live with text and email alerts. And again, if you're a member, you got that. If you're not a member, I suggest you go and join. Take the free trial in the very least. Free trial. We have a 1-week free trial for the Research Center and the Intraday Stock Chat, and it's there for the taking, folks. And again, get access just like a real subscriber. Get it and take the free trial for the Research Center and Intraday Stock Chat. And again, you'll find out what I shorted today. And again, continuing to watch how things have been going, as it's been a very, very fun trading last few weeks as the volatility has increased. Markets again at the lows of the day here. Let's see if we can break down to this level here. That'll be your next support if we really securely take out this 50. Right now, you're still intra-candle. You don't know if you really took it out, and that's something that we will be watching. But nice little sell-off, and I still have to say, the retrace looks to be intact. I mean, take a look at this. Here's a good picture. Look at this. Downward move. This is about a 0.618 retrace, which is a Fibonacci retrace approximately. And then look at the market start to fall back down. That's a classic bear flag. Down, up, but inside of the big down move, a little less steep. Remember, the bear flag always has to be less steep, or if it's a bull flag, less steep than the initial fall. And sure enough, look at the market now starting to sell off even more so, and it looks like we're starting to break down a little bit more. So now, will the markets go negative? How will things react? What's going on here? I mean, these are all big-time questions that we want to follow. And again, I'm noting here silver starting to break down a little bit. Silver was having a very, very big day, but even silver is starting to sell off now to the downside, and we will keep a very, very close watch on this trade as well here. The GLD, let's take a look. GLD getting a little bit of a dump, only up 16 cents on the day. Let's take a look at the UUP, which is the dollar. Dollar's been slowly inching up all day, which, as we know, also puts a little extra pressure on the market, although the dollar is still lower on the day. All right, so a lot going on here. Volume is light, but there's actually a lot of keys to the puzzle here that we must all be watching. Right, because literally, I think the next couple days will dictate what happens the rest of the week until Friday, the jobs report. Jobs report on Friday will be huge as well. Market is really looking towards that. Also, one thing to note here, the financial sector has been a leader to the downside. They started out to the upside, but the financials have rolled over. Look at this move early on, and then since then, financials have rolled over. This is JP Morgan's intraday chart. Take a look at Goldman Sachs intraday. Look at that. That is not a pretty chart at all. And the financials, again, seem to be leading to the downside. Goldman Sachs opened higher, pushed up for the first 20 minutes or so into 10 o'clock, and then has reversed to the downside. Bank of America, same thing. Not a very pretty chart there. Wells Fargo. So financials across the board are looking very, very weak here, and that is seeming to keep the market under pressure. In addition, Amazon. Amazon's getting beaten down big time here. Look at this move on Amazon. So a few, or at least some of the leading stocks here are showing some weakness, no doubt about it. We do have some strong stocks out there as well. Apple Computer up $3.50. That's a great move on Apple, but even that is fading off the highs of the day. Hewlett-Packard's getting a rare bounce here after some not-so-good earnings last week. And 3M, which is a Dow component, also showing signs of life, although rolling over a little bit now. Also, Chevron having a good solid day, up 65 cents. Not up that much, but again, that stock continues to see some incline there from where it opened, or I should say closed on Friday and opened today. And Exxon as well, which is a Dow component, up 45 cents. But even that is starting to fade a little bit here. And again, really all about watching where this market is going to head. And you can see a nice little drop, a little in spirit of bear flag again playing out to the downside. And the bear flags seem to be working lately, something we all must pay attention to, obviously, to note that. All right. Very, very important here, guys, to keep a close eye on the market. All right? And again, we will keep you guys fully posted on everything that goes on here and fully versed across the board. Remember, join that research center, folks. Take the free trial. Join the chat room. Take the free trial. Remember, webinar is coming up this coming Sunday at 1 p.m. Eastern Time. You will get as a compliment to taking it the DVD that will be our first debut DVD methodology webinar for free. It will be for sale on the website for a hefty price. Might as well take the webinar and get it for free. Take care, folks. Again, we'll see you soon.